The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, just after 9 a.m. Eastern Time. We got some inflation data, folks, and the current trend is persisting. Inflation, I'm not so sure that the disinflation process has begun. Man, Chairman Powell, those words, they were so strong in his last press conference, and I'm not sure they hold true right now with the data that we keep getting, man. We'll get into it in a moment, but the market reacting accordingly. You got the S&Ps right now below the lows of yesterday, off 1.3%. We came into that number, folks, at 39.90. So you're about 20 points lower. Look like the market. Not sure where you got the acceleration from the lows of yesterday, heading into a price point above 4,000. But just like that, you take it all back and then some with the S&Ps trading at 39.67. The lows of yesterday about 39.74. S&Ps off 1.3%. NASDAQ just below the spike low of yesterday as well. NASDAQ, how about 11,999? You're off 1.7%. The Dow off 1.1%, also just below the lows we had yesterday. Russell, same exact area, right before the spike, right below the spike low yesterday, 1.4% in the red for the Russell. Crude catches a bid from Wednesday this morning, holding up relatively well, up about 0.5%. Gold reacting. We got action in yields, dollar, metals, commodities, and equities, of course, across the board, folks. Gold contract negative by $5 at 18.21. You could actually maybe potentially have seen a bigger move. We'll see how it goes throughout the day on rates. We'll get into it in a moment, though. And here we do. Notes, right? Here we are. So you got the 10-year. Now, what are we, rolling over contracts or something here potentially as this thing changes and we get a little bit of a spike? But you got the 10-year right now yielding about 3.93%. Pretty remarkable. You got quite an acceleration for higher price and lower yield. And yields, okay, yields are not even back to the highs that we saw yesterday morning. So keep that in mind, man, because, boy, if we ever get a huge acceleration, right? I mean, look where we were, okay, and look at the volume and the volatility that we're getting right now in that number. Not as volatile as the market in terms of, boy, if we ever get a spike down in price and a spike higher in yields, that could be fuel on this market today, folks, coming into a Friday already down 1.3% in the S&Ps. That's your 10-year, down 15 ticks. You jump to the 30-year, off 22 ticks right now. We jump over to the VIX, continuing to catch some life, back above 22, 22.29. We jump over to the dollar index as we jump around. There's a move for you, man, okay? The dollar hitting this market in a big way. We're above 105. We were trading at almost 104 on Wednesday. We were trading with a 103 handle on Tuesday, okay? And, boy, you're going to back this thing up on a daily. We're now above 105. It's been quite a pop since we were pushing a price of 100 handle, folks. Just like that, the month of February, pretty much reversing everything we saw in January and then some. And taking a look at the dollar, I mean, this thing's been a one-way trip from November, and we're now getting to levels that you're talking about where we put this thing, right? Whether you choose maybe the area that this based at about 101.50, if you cherry pick the low of about 101, either way, we're getting close to bumping up to that 382 line of the dollar index, about 106, somewhere in that area. But, boy, the data, folks, the data could change just about everything. And let's get into it. It's a hot number, man. You can't overstate. This is the Fed's preferred inflation gauge, okay? If there's one number, you got non-farm payrolls, you got CPI, and you got PCE. And PCE to the Fed is probably a bigger number than the CPI is. Well, what's happening, man? It just keeps going hotter than anybody imagines, hopes for, etc. Hope is not a plan, right? Careful about hoping, folks. 0.6% from a month earlier. Times it by 12, you're at 7.2% over the next 12 months if that holds true. Not exactly how it works, right? But, boy, that is in some fashion how it works because things are volatile. But I always, in my own mind, I take the monthly data. Now, what matters most is what it is versus the expectation, because the expectation is already priced into the market, okay? The expectations were somewhere in line about 0.4 and 0.5%. Yeah, median estimates, we're looking for 0.5% on the PCE and 0.4% on the core. Both of them came in at 0.6%. Yeah. So from a year earlier, PCE is up 5.4%. The core number's up 4.7%. But as I said, from a year earlier, the core is up 4.7%. Over the last 30 days alone, it's up 0.6%. So you're actually accelerating versus the year-long number that you have in there. And there's numbers everywhere in this thing. I'm going to jump around a bit. Personal spending jumped 1.1%. I think that was in line with expectations. Is that correct? Yes, it was. Real personal spending projected to rise 1.1%, so that's in line, but still the largest advance since March of 2021, following weakness at the end of last year. So what's happening? Inflation's picking up. Spending is picking up that we haven't seen in almost 2 years. Personal spending is at a level we haven't seen in almost 2 years. We're adding 500,000 jobs a month. We got PCE running hot. We got CPI running hot. We got retail sales at 3%, folks. Not exactly how it's supposed to look. Now, check out this chart, okay? This is the PCE. In black, you have the headline number. In red, you have the core. They've circled the latest number that we just got. On the bottom, you have change in inflation-adjusted spending, okay? This is real spending, I think is how they put it. Let's get exactly how they put it because I like it. Real personal spending is how they put that. Inflation-adjusted, okay? But check it out, folks. We got to get back to 2% on this chart. 2%. Can you find 2% on this chart? It's way away from where we are right now, okay? And guess what? The line is going up. Now, pay greater attention to the red line than the black line, okay? Because the black line could see a big spike. Why does that spike coincide with? It coincides with a lot of the oil, okay? The oil run up to June, when crude was at 130, is a real reason you got the black line in terms of the headline inflation numbers persisting at pretty astronomical levels. And the reason why it looks like if you take the red line off, right, you'd say, yeah, that's a pretty clear trend off the top. Of course it's a clear trend off the top. We just had crude go from 130 to $70 and change, okay? But if you show people the red line, you could say, yeah. You could say, yes, there could possibly be a downtrend going on. And then what if you ask somebody, right, that's not hearing anything else in the noise, okay? They're not hearing any other data out there. They don't know that this is the Fed's preferred inflation gauge. You take the black line off here. You just put the red line up there, which is the change in the personal consumption expenditure price index minus food and energy, core, okay? What would happen if you showed them that red line and said, tell me how long you think it will take for us to get back to 2 on the current trend? How long would it take, folks? It would be a long time, okay? So that's the fear, man. This is not on a one-way trip, and we're going up. I'm being kind, okay? I'm being kind, as in we're going up. We're probably at a pretty similar area that we've been at for like 6 months, man. So Chairman Powell, disinflation has begun, and you get the spike in real consumer spending that's combined with that. You got 500,000 jobs. We got wages in here as well. Let's get into wages. The labor market, all right? You want to see a staggering number? This will be a good way to go in. Incomes rose 0.6% at the start of the year. And here we go. Wages and salaries. Okay, so inflation-adjusted disposable income surged 1.4% in January, the biggest advance since March of 2021. Wages and salaries, unadjusted for prices, increased 0.9%, more than double the prior month's gain and the most since July. Savings rate up to 4.7%. It's going to be a wild one, folks. It's Friday. Don't go away. S&P's down 53. We'll be right back after the break, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 54 points right now. That's a daily of the dollar. Pulling it back on a 5-minute chart, and you can see this thing's just accelerating, folks. And the dollar accelerates upwards, the market's going to accelerate downwards. That's the way it's going to go. And boy, we have had quite a move, like I just showed you, man. The only thing we're getting into right now is the 382, folks. Of the entire move we've had from the dollar, you traded from 115 to basically 101, right? We're at 105. It's nothing stopping this thing getting from 106 to 108. Now, listen, in the future, okay, there is going to be some pressure on the dollar. The run-up we had was when we were the only game in town in terms of raising rates. That is changing. So we're going to have some competition in terms of competition for yield. And as people compete for that yield, they have to purchase and use the dollars that yield is denominated in to access that yield, right? But we're only back to where we were January 6th, the week of. No, that's the day of. Only back to where we were January 6th. As in, if you asked me on January 6th what the data is going to look like for about the next 6 weeks and where the dollar is going to be, if I told you where the data was going to be from where we were in January to where we are right now, would you say that the dollar should be higher or lower than where we were at 105, having traded from 115? All right, and I'm giving you all these cases, and they're bear cases, man. But boy, context is important. S&Ps are now down 57 points, okay? NASDAQ 100 now down 1.9%. Okay, I just showed you. What did we do in the dollar index? How much did we give back? About a 382? What is the NASDAQ giving back? Now, it's a different timetable, okay? Because the dollar index, it's important to have all these, man, because they're so related right now in terms of where they're moving, right? Yeah, almost pretty similar, I guess. I mean, you have the dollar index really traded lower all the way through the month of January versus you have the NASDAQ 100. Yeah, it's pretty similar, man. You know, you pull back to a 382. Point being, NASDAQ has a 382 pullback. And is that right? Yeah, look at that. So the NASDAQ did all this year, right? And meanwhile, the dollar is way back there. Nonetheless, they're both basically at the 382. Maybe one led the other, but this is a much larger move from November, the beginning of, versus the market we're looking at the start of the year. Nonetheless, man, watch out today, folks. It's Friday. We still got the market near about 4,000. And in my opinion, okay, that chart says it all. All right? You think this number's going back to 2% with ease in the red? We'll see, folks, okay? And what everybody keeps talking about is the comps. Very important, okay? Because we're coming into where the comps are pretty lofty. We're coming into December where we had lofty numbers. Now, we're coming into February, March. We're coming into where inflation was already high, right? We're coming into numbers for the month of January when last January we were above where we are right now. So the comps aren't going to get much more friendly. Now, yes, every month the prices go up, so they do, in theory, get a little bit more friendly because you're comping out against a price that was probably higher than it was the month prior, the year before, if you follow that along. But we're in that area, man. Okay, we are now 13 months past where we were above this price point in terms of comps versus, okay, all of last year. You back it up 2 years ago, right? You're comping against a PCE print of 2%. Pretty remarkable that in March of 2021 we were under those levels and you were at 1% on this chart, man, let alone the quick rise up we had. Okay, now you want to see something amusing? Let's see. Let's do it this way in terms of how long it's going to take, man. I'm not even going to do it, folks, but if you do a simple cup and handle formation in terms of if this thing is on its way down and maybe the peak was somewhere between March and June, and even then's being kind, maybe the peak was between March and September on the core of last year. Well, what do you got? You got more than a year on the flip side. The Fed would love that if it went down that quickly. But nonetheless, we got an uptick last month. It's going to take a while to get back to 2%, folks. We got wages going up at bazooka levels in terms of the numbers they're talking about. Incomes rising 0.6% at the start of the year. Acceleration in wage growth. Annual cost of living adjustments for Social Security and supplemental security income, which was the biggest increase in decades. Yeah. I'd be careful out here today, folks. Still sitting pretty near 4,000 right now in the S&Ps, and boy, things have gotten pretty dire in terms of what's going to happen with inflation going forward as we jump around. All right, what else do we got pulled up here? What was I looking for? Oh, don't do this to me. I got a couple. Oh, I'll have to find it in the next one. All right, I had it up here. That's not the one. That's not the one either. Here we go. I had it up here, but either way, this is from the Journal. It's talking about interest rate concerns push investors into dividend-paying stocks. Now, listen, there's nothing wrong with knowing the risk you're taking, getting in some growth stocks, liking the fact that you're getting the NASDAQ 100 under 12,000, okay, when this thing was just trading at 15 or 16,000. Long term, yeah, you might have the acceleration. But my dad was talking about last night, man, I don't know where, I think it might have been a Bloomberg article, and they were talking about how lenders, right, are going into super sales mode. It's my term. In terms of what they're trying to offer people, and they're saying, date the rate, marry the house, and basically implying that within a few years, rates will come back down. You'll be in the house. You don't have to be locked into that rate. You marry the house. You find a home you want. You purchase it. You get a rate that's above where you want to be in the long term. But guess what? You plan for that. You date the rate, you trade it in a few years, you keep the house, you marry the house. Even going as far as maybe they buy you a point for a year or something like that. I saw in one of the headlines, right? And as my dad said it, don't count on that, okay? Just be aware of what you're paying, the rate you're paying, and make sure you can afford it, because there is nothing saying that in 2 or 3 years we are back to an environment that we got so used to, which was basically a zero interest rate environment going forward. That's why so many people aren't going to sell their homes for a while, man. You know, you're trading away a godsend. You got into a 30-year mortgage in the last 2 or 3 years, and you sell that thing right now, you're giving up 28 years of debt at 3% in an interest rate environment that's well above that right now. So there would have to be a huge incentive to be able to do that, because guess what? Where you're going to be on the next one, et cetera. It's a wild market in terms of where we go, but that is something hitting things. Now, dividend stocks, that would be a good place to try and hide too if you do want some action. Income generating funds record inflows, record inflows amid flows that rates will stay elevated longer than expected. Maybe record, probably. Income generating funds record inflows. Well, I guess they always record inflows. What's that headline, right? Getting into some of the numbers, though, the part I wanted to pull up as we come into this next break was this chart right here. Weekly net inflows flows into U.S. mutual and exchange traded funds that buy dividend paying stocks. Yeah, not many outflows on that chart, man, from 2022 into 2023. And this isn't getting enough love, man, in terms of the statistics. You take a look at the statistics they have in here. Come on, I got to find it. Where are we? There we go. The S&P 500 High Dividend Index, made up of the S&P 500's top 80 dividend-paying companies. I'll have to pull this up. Only fell 1.1% last year, including dividends. Not bad, man, when you have the market tanking 18%. NASDAQ down more than that. The index lagging things a bit, as you'd expect so far, but nonetheless, strong performance, down 1%. All right, folks, stay tuned. We got the S&Ps down about 55 points right now. It's going to be a wild open, I imagine. Stay tuned as this market tries to digest, yet again, some hot inflation data, and it's on a Friday. Stay tuned, folks. We'll be right back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Apologies, folks. Welcome back. I got caught in the den. We're talking about dividend stocks, man. What does that say? We're talking about dividend stocks index in the den, folks. Like that one. And I believe this is the portfolio they were talking about here. That this is the S&P 500. What do they call it exactly in the article? We were just high dividend index, I believe. As I was looking around, it's just SPYD. So I believe it's got 80 equities in here. Let's see if they go all the way down in terms of what we have on the Thinkorswim platform. Are we going to get to 80? I think that's what they said. Yeah, we get to 80. So they got between about a 1% and a 1.4% weighting the biggest stock in there, Paramount. Pretty interesting, right? Pretty interesting. You get Paramount as the biggest weighting in the S&P high dividend index, but nonetheless, you take a look at this thing on a chart, and yeah, as you can see, man, this is going back to last January. There is January 2022. You come in at about 42. You end the year at about 40. I imagine maybe you include the dividends that you're getting in there because the stock was down, 5%, 6%. You throw the dividends in there, though, and that's probably what brings you down to a potential loss of 1%, something like that. This thing up slightly this year. It's going to underperform the market when you get a run like you do on the NASDAQ. But nonetheless, we got higher prices for this year. But take a look at that because that's an area as well. And they talked about in here just those inflows in terms of where they're going and pushing investors into dividend stocks. And folks, I was listening to Bloomberg earlier this morning, man. There's competition for capital, okay? The guests saying, you're gonna get treasuries up about 5%, man. You're gonna get T-bills. Of course you are. And it would make sense, folks. You're looking at like a 1-year CD, I think a 2-year CD, right around 5% right now. I mean, to put this in context, all right, and this is where things get funky, okay? Do you want to buy the S&P right now at 4,000? Okay, let's say you had $4,000 and the S&P cost $4,000. It's pretty close, okay? Well, if you're getting guaranteed 5%, right? That's the same as the S&P sitting at 4,400 in 2 years risk-free, right? It starts to get weird when you go out three years and you're like, you got to be at 4,600. In 4 years, you got to be making new highs, okay? And this is just at about 5%. In 4 years, and of course this can happen, folks, this market could plow higher in 2 years as the Fed starts cutting their rates. But boy, there's a lot of risk, okay? And you might go down 26% first, and then you really got to dig yourself out of a hole. Just be aware of that when you're looking at these long-term projections, because there is going to be a battle for capital that we haven't seen in a very long time. And you're talking about 5% returns. That is a huge number for a lot of people, especially when you get to the upper echelons of nearing retirement, in retirement, et cetera, where maybe you're at that level, you still have decent stock exposure. And at these price levels, with inflation raging where it is that something you want? Are you willing to take the equities diving back down to about 3,200 or even more or even less? Or are you going to take your free 5% and say, you know what, man, I can take my 5%? Because guess what? If I take my 5% over 4 years, that's 20%. And I got no risk. These conversations are happening in people's heads, man. All right, let's jump around to what else we have going on in terms of companies that are moving. Companies with their numbers. Square out with their numbers. We jumped to a short-term chart last night, up to about $80. We give up some of that gain with the market. I mean, market's getting slammed, and Square is up 3.5%. Decent numbers for them, but be careful because that is quite a fall from grace. From $290, this thing's been chopping around with a low of about $50 to $60, the upper range pushing 80 or 90, and we're trading right now at $76. So still somewhat within the range this thing's been trading at. We jump over to Beyond Meat. And there's a pop for you, man. Catching a bit on the open as well. Beyond up 17.3%. Decent numbers after the bell last night, I guess. I hadn't looked at them, but boy, you're pushing the highs we had February 2nd. Let's jump over to the Analyze tab. How big of a company are we talking about right now? $1.2 billion Beyond Meat. Far cry from when they were pushing 240 prior to the pandemic. I remember that original run, man. Sometimes you just got to listen to yourself, folks, saying, this does not make sense, folks. I remember it. I remember my dad and I were on the air. We were taking a look at Tyson. We were comparing the market capitalization of a company like Tyson, okay, that delivers chicken and everything you can think of, right, and that they were going to have their own brand as well. And then you compare a company like Beyond Meat, and they were creeping up on valuation levels for that company. It made no sense whatsoever. And, of course, the market paid attention. And listen, I've tried some of these fake meats. They will be around. They're not going to, they're trying to. The best way for these companies to make money, maybe that's what they're doing. We'll have to pull up some of their numbers, is to be an addition to people's diets that eat meat, not just to serve those that don't eat any meat. The market's much larger for people that might be aware that they eat meat. But you know what? I might eat a little bit too meat. Maybe I want to cut red meat down to once a week, right? And maybe I'll dabble in some Beyond Meat burger for one of the other nights a week to save myself doing 2 nights of red meat. Nonetheless, I'd be careful of that one too. You're still valued over $1 billion, and they have a long way to go, man. And there's going to be a lot of competitors. And that's one thing we were talking about back then. It was like, hey, Tyson's going to have quite a lineup, and they get the whole distribution, man. And I'm not sure Beyond Meat's going to blow away the world. And guess what? They haven't blown away the world. They're up 100% from where it was a month ago, though, as this thing catches a bid, up 17% right now. Let's check out Wayfair from yesterday. This thing falls out of bed. Yeah, holding up relatively well on a down day in the market right now. Let's jump around to some of the FANG stocks. The biggest of them all, Apple, off 1.6% today right now. We jump over to Microsoft shares, down 1.8. Google shares right now off 1.3. Amazon off 2.1% right now. Tesla shares off 3% right now. I mean, markets catch a little bit of a bid. Let's see how the dollar's trading again. Yeah, dollar gets a little bit of a pullback, slight reprieve, but you're talking about highs made right near the open. Keep your eye on that dollar if you trade in this market, man, because you see that dollar accelerate higher. You see yields. See where yields are? Yeah, watch out. Remember when I started the program? Where were we? We were 10 points higher, man. What are we coming to? We're probably pushing the level in terms of where we are right now. Yeah, we're back to 3.96%. When I started the program, we were at 3.91. I was saying, hey, that doesn't exactly make sense in terms of if yields ever catch up to what the market's doing right now, they'd be throwing fire on the fuel. The dollar was moving at that time, so the market was reacting there. But pay attention to yields, because we're pushing 4%, man, on the 10-year. We're only 4 ticks away. I imagine we're going to get there. And how the dollar reacts accordingly as the markets continue to price in higher yield, be prepared for a market that's going to react as well. Now, we're only at the lows of yesterday, folks. And I would argue that PCE, that cements that disinflation may not have begun yet. And if it began in the slowest terms possible. How is that possible, right? Now, where are we on the S&Ps, though? We're right at the 618. Look at this, 39.60. Keep your eye on that one. If we're going to get a bounce, maybe that's where we get it. We're at a 618 in the entire move higher, from about 3,800 to 4,200 in the S&Ps. We're back to 39.70, that price point on my chart. And again, folks, an art, not a science, where you take the beginning of this acceleration on January 6th. But the market had a nice base here, man. You started building that base December 19th. It took off on January 6th. But you're talking about a move from basically 38.30 up to 4,200, 41.75. So yeah, maybe that's an area we finally catch a little bit of resistance. S&P's off 1.2% right now. NASDAQ off 185, back above 12,000. Stay tuned, folks. We'll take a look at some of the other equities we have moving today. We'll be right back after the break. Don't go away.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&Ps down about 53 points right now, just flirting with the lows, chopping around at this area since about 8:30 in the morning. We got a slight spike there on the open to 39.75, and just like that, the market gives it back. Interesting, 39.60, as I mentioned, where we're chopping around, the 618 of where we're trading at in terms of the run you had up in the S&Ps to start the year from about 3,800 to 4,200. And just like that, folks, we're back under 4,000. And boy, really tough to find an inspiration to buy right now at 4,000 when we have so much volatility looming in the next 2 or 3 months. Where we go on this Federal Reserve, time will tell. I talked about the Fibonacci numbers, folks, 39.60. Where did I learn a lot of Fibonacci from? Our man, Larry Pesavento. And folks, in less than 2 weeks, it's a week from next Wednesday. So March 8th, Larry's going to have a live trading event, folks. Trade what you see. Larry does about a couple of these a year, 2, maybe 3 a year, depending on his schedule, 9 a.m. till 2 p.m. Eastern time. So it's 5 hours on March 8th. You'll be in there with Larry. You'll be watching his screen as he is live trading, okay, the market. Larry usually doesn't trade for the last couple hours of the session, which is the reason why he put that 5-hour time schedule together, 9 a.m. till 2 p.m. The cost of this webinar is $295, folks. It will be archived if you can't attend all 5 hours or if you want to watch the replay. And in that, you get a month of his newsletter, Fibonacci 24/7, which is a $97 value. The newsletters are tremendous newsletter as well. He puts out a great report every weekend. He's got about 20, 30 charts in there for subscribers. He probably sends out 5 to 10 videos, depending on the market action, for subscribers, along with the report over the weekend. And then he's always sending out updates throughout the week, trades, etc. The moment you sign up for the webinar, you gain access to the newsletter, so you don't need to wait until next Wednesday to sign up, a week from this coming, March 8th. Sign up now, folks. Check it out. It's an outstanding webinar, March 8th. I'm going to try and attend most of it. I'll do my program, of course, as I do. But right after I jump off the air, apologize to our man, Basil Chapman. I'm usually watching his program, but I jump into that Larry Live Trading webinar because it's an awesome event, folks. A bunch of good traders in there a week from next Wednesday, and check it out. And we got a market, man, right now. And, you know, my dad was talking to Larry, I think it was on Monday, and they're having a conversation as this market's continuing to drop here. And what my dad was saying, which was so cool, which was right, is that, you know, they may not be right, folks, but at least they're forward-looking. And when you say that, what it means, right, is that you have the price projection ahead of when it gets there, right? So during this run-up, as you began to pull back, if you're looking for a pop, doesn't mean you're going to get there, but you know ahead of time that the areas that you're looking at on Fibonacci, and Larry's going to deal with a lot more than just this, okay? But you know he uses fibs a lot, if you listen to him in any degree. And you know that number ahead of time. So it allows you to build a trading plan, build your entries, build your stops. You combine it with the A to B, C to D that Larry's going to talk about in the webinar coming up a week from this Wednesday. Check it out, folks. I'm telling you, you get the newsletter for a month as well. And it's not like we sign you up to renew the newsletter. You just get it for the month. It'll stop after that. You're signed up for nothing recurring when you sign up for that class. $295 for that 5-hour webinar. We include the newsletter for a month. And if you're already subscribed to Larry's newsletter, you get a month of it for free. And you're already paying for that as well. So check it out, man, because I've learned a lot over the years watching Larry. They're usually great events. Hopefully we get a good market, of course. But we get a good market right now, folks. And March 8th, that'll be 2 weeks before the Fed meeting comes. In terms of the next Fed meeting, March 21st and 22nd, I believe, is when we get the next Federal Reserve meeting. So it'll be quite a buildup in terms of where the data is shaping up, where we go from there. As this market, I'm not so sure it's going to stop at 39.60, man, because the data just has been as bad as it can be. And I'd say the market's still pretty fortunate to be trading at about 4,000 right now with how the inflation conversation has changed. And I wonder if Chairman Powell at this point actually regrets his statement that disinflation process had begun. Because what happens if it spikes again? Strong words, man. Strong words. And I'm not sure the data lined up with it, especially in light of what we're getting. And I'm starting to think the market may be paying attention to that as well. Yeah. Look at the 10-year continuing to drop. What are we at? We there yet? We might be. No, not yet. Are we still sitting 3.96? Excuse me. Yeah, 3.96. So right there in terms of where we are. And let's jump over and see how we're trading with the dollar. Yeah, dollar pushing highs, man. 105.28. The high was only 105.32. And S&P's going to be down $100 easy, man. 3,900. What would that put it at? That put it down 120 if you get to 3,900. But there's about to be a quick repricing in this market, I think, folks. It's pretty quick, pretty amazing how quickly you can give up such dramatic gains to start the year. But just for some context here, the S&Ps on the day that this rally started was only 30 points away from where we're trading at right now. No, less than that. 25 points away from where we're trading at right now in the S&P. Let's take a look on the NASDAQ 100. Yeah, quite a different story in the NASDAQ 100. This thing rocked higher. You're only back to a 382 of the move you had. Isn't that cool? So it's amazing on how on these swing points, so often the market is at one of the Fibonacci levels. Where's the NASDAQ? It's sitting at the 382 right now of the run you had higher. Where's the S&Ps? It's at the 618, man. Pretty remarkable. S&P's the weaker index right now, not clawing back. Clawing back most of those gains it got within only 30 points of where it was on January 6th. And meanwhile, you get the NASDAQ 100 was trading at 11,150. So you're 800 points above where you were trading at on January 6th. Quite the different story in the S&Ps right now as we chop around right near that 3960 mark on the S&Ps. All right, what else do we have pulled up here? Let's see. Got a lot of windows open right now. Forgive me. Is that the one? Yeah, we can talk about that. Yeah, so this one, it's kind of what we've been talking about. Why the time to fix the 40 in your 60-40 portfolio now. Treasury yields are an opportunity to get back to what that 40 was supposed to do, which is diversify your risk assets. What's going on? I'm in here. Why aren't they letting me in? Why are they trying to? I should have unlimited access. What are you doing to me, Bloomberg? I had that up already. All right, they're not going to let me in quick enough. There's a battle for capital, folks. You're seeing articles all over the place, man. There was no point in putting money in fixed income at 0 to 1%. Larry Pesavento, our man, used to talk about it all the time, right? Doesn't make sense. That's not how the game works. I talked about it with our man Kevin Hincks yesterday, and it really does. Folks, they teach you really early on. There's consumption and savings. You either consume something now. Let's say you have $100,000 in savings. You can consume something now and enjoy spending that $100,000, and you can probably have a pretty good time spending that $100,000. Or you can save that $100,000 and consume at a greater rate in the future. Otherwise, why are you saving it if you're just getting the same exact money in the future? To a certain degree. Nonetheless, it makes sense, man. And I can't say it enough, because this market's dropping, yields are rising, and there's no reason to go out too far just yet, man. because we got at least a couple months here where things are up in the air in terms of where rates are going. Maybe we get over the hump in the next 3 to 6 months, but we got a couple months because this is a bad month of data in terms of a hot economy. So they're going to wait to see a continued amount of data on the flip side. Stay tuned, folks. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's down about 61 points right now. And if you just take, folks, 41.75, so I'm not even taking some of these tails, but if you just take 41.75, which is a pretty fair high here in terms of how many times you touched it, 1, 2, 3, 4, almost got there a fifth time, sixth time, and you really sold off at a price point of 41.68. You take 41.75, this market is down 5.2%, folks. 5.2%. And realistically, you're down in 8 days about 5%. So be aware of what's happening in this market, man, because things are getting repriced. When you're down 5% in a matter of 8 days, and what are we talking about in the NASDAQ 100? You're down from 12,800 to 12,000, so you lose 800. Yeah, pretty similar action in terms of what, 5-6%, something like that. Pullback, very tough to find a reason to be buying this market right now with the volatility we're facing. And if that's the case, folks, it's going to progress because I'm not the only one. Now, let's jump to Apple. This one is cool to think about. Apple down 2.2%, paying the price with the market today. Still quite a run from 124 up to 155 to start the year. Apple makes major progress on no-prick blood glucose tracking for its watch. boy, if they solve this one, man, you're talking about 1 out of 10 Americans, I think they have in this article. I'm not sure why it's telling me to sign in here. Company hits major milestone creating blood glucose monitor. They're going to get me here. I don't know. I can't get in right now for some reason. They just kicked me out and I got to log back in. 1 out of 10 Americans facing diabetes, I believe, was the number they were talking in there. And, they're not letting me in. I'll get in there. Nonetheless, they seem like they're a couple years away, but they may get there. And fortunately, I'm not in that position, but I can only imagine that anybody that goes through that has to prick themselves many times a day to test their blood sugar levels, that is going to instantaneously do whatever Apple's got going on to make sure they don't have to do that if they've solved that problem. Pretty interesting. Getting into healthcare. Amazon wants to be in that business, I'm sure, as well. And where do we finish, folks? We finish with the S&P sitting right at 3960, off 1.5%. NASDAQ 100 off 1 3/4%. Stay tuned, folks. Live programming all day. We got our man Basil Chapman coming up next. Steve Rhodes at 11. Fast Market at 12. Larry at 1. Check out Larry's webinar, folks. Check out the details on the front page at TFNN.com. Dave White and Tom O'Brien this afternoon after that. Have a great Friday. Have a great weekend, everybody.